Mm-mm. What's going on, everybody? Um, if you're entering, say hello. Uh, Tone, what's going on, brother? Just waiting for a couple more people. Yeah, a few more people to jump in here. Yeah, I'll just get started right away. But overall, in a nutshell, uh, I'm gonna tell you today. What's up, Brian? Why you probably just want to stay out the market, for this week. I don't think it's the best environment for any swing traders. Day traders, do your thing, but anyone that's looking to get into a position today and potentially close out later this week, forget about it. For multiple reasons. I have this stock on screen right now because I was joking about stocks I don't like to see. But let's get back to the market here. So if you've been following the market the way you should be, if you care about protecting your capital, you know very well today was an important day overall, being that we had a CPI update. Um, if you don't know what CPI is on the market, or it, what the CPI is related to the economy, excuse me, and how it affects the market, please, I suggest bookmarking this. And they have it every month. It's pretty much just an update on the rate of inflation. So last month we clocked in at 6.3. Expectation today was 6.1, and we clocked in at 6.0. So we had a beat, all right, which is good news on the market. Why? Because people, if inflation is coming down, they see it as the Fed doesn't have to be so aggressive with interest rates. The market doesn't like interest rates. So when you start talking about decreasing interest rates, market gets excited, right? But it's very irrational at times because it'll gap up like it did today, right? It closed at like 399 yesterday, opened up at 410 today. That's ridiculous. All right. Just off of that report alone. Then it's like, oh yeah, well, hold on. Tomorrow, all right, this is one reason why you want to stay out the market. Tomorrow we have another announcement, and it's this median federal funds rate for the end of 2023. So if you remember at the end of 21? Yeah. They gave an expectation of, the fund rate by the end of this year. And I don't remember 100%, but it was, I believe, like 2.5 to 3%, if not 3% to 3.25. And as the year went on, it became more than that. So pretty much what this is telling us, they've already confirmed, well, not confirmed 100%, but it's already expected that the interest rate for this month is 50 basis points. So good news again, but the Fed has no, intention to completely stop or slow down going into next year. So we still have to be careful. All right. So today we got good news. Maybe this is the bad news that they're starting to anticipate, which is why we're seeing some of this sell off. Maybe. All right. That's all fundamental reasons. But let's just stick to the technicals. All right. That's what I just talked about. There was fundamental, but like important stuff. Technical reasons. All we did was, look, if you can identify lower highs, higher lows, right? Got this sort of thing going on. This is how bull trends form. You get lower highs, right? At the same time, you get higher highs, right? What is cool about this, when you can identify those, you can kind of start, um, identifying limitations of the market. So areas of support and or resistance, right? So today, all we did was, oh, let me not ignore this high that I recently marked out, right? Was tracking DAL, looking for continued upswing. Glad I didn't get in late yesterday. Felix, what's going on, brother? DAL, yeah, I would just stay out the market altogether. If you're not doing like credit spreads or something, it's chop season. All right, volatility is very high. So all we did was revisit this high from before, and that's also the high from back here. That's also a low. an area of congestion. So 410 is no joke, guys. All right, 410 is the real deal. And let me zoom out even further. Let's get 1 year here, please. Rennie, I'm not gonna lie, Rennie, I don't know how to say your last name. I'm not even gonna try. What's going on, Rennie? I would say Lemaire, though. If I had to take a shot at it, I would say Lemaire. I don't know why. I feel like it's a silent G, you know? What's going on, James? I don't know if I said what's up already, but check it out. Oops, not that. So I always say you want to look at the market, you know, from a broad scope first. So when you draw your trend line, right? Reference point, drag it on through. Oh, it's Lemage then. It's a silent R. See, I knew something was silent in there. Is it Lemage? Is it French? Yeah, all we did was revisit that area of resistance, right? That area of resistance is also, let's use our good old Fibonacci, about 50% retracement, okay? That area of resistance, again, is a recent area of resistance there. So you have many factors coming into play, tripling down on that 410 level as why it's resistance. So I'm not really buying into more upside until we close above 410, all right? Write it down, set your price alerts. When we close above 410, bring your bullish plays, all right? Until we close above 410, we remain in this chop zone. So what I've been telling, or what we've been talking about in the elite group is we're pretty much just back into this chop box here, all right? And our range here is, look, let's close back above 410 for the upside. And maybe when we close back below 390, we can play to the downside. But until then, I'm not really here to try to predict what's going to happen. You know, I like to follow the herd, so to speak. So I don't care about, I told you this was going to happen, or see, I said it first. That's not what I'm here for. It's just giving a perspective, and, you know, your priority should be protecting your capital. So if you want to do that well, you might as well just take the right steps, and that's just wait for a confirmation. Don't buy into the hype. Ignore whatever you're hearing on the news. Block out the noise, and, you know, actions speak louder than words. And this is where we watch the action. You know, it's happening right before our eyes, and I really don't know what to think of this yet. Again, we already talked about this may be one reason why you want to stay out, but I'll go a little behind the curtains as to what we do in the elite group as well. So usually when we look for plays, we'll bring up this website. It's a free website, by all means, finviz.com. Check it out. We're not sponsoring them, but it's the website we use all the time, all right? It's free. There's something we call market posturing here, and I'm not going to get into it, but I'll tell you right now, the market posturing doesn't give a real sense of clarity of what it wants to do. So that's another reason why, you know, even if you're not aware of the news that's going on, when you get familiar with this stuff, it's already like, time out, something ain't right. And for that reason alone, you probably just want to stay off the market there. So that's reason number 2. Let's go to reason number 3. All right, this is the futures market. We have the dollar right now. Usually the theme of the year, when the dollar's negative, it has a negative relationship with the SPY. When the dollar's going down, SPY is going up. All right, and usually when the VIX is going down, SPY is going up as well. So right now you can see, maybe you can't. I'll zoom in real quick. Bear with me. I just want you guys to focus on the last red candle on this chart, for this red candle. It's right at an area of support. You know, yes, it's a bearish candle. Volume is, you know, you could say that's pretty elevated, but it's at support. So it's not confirmed breaking down yet. So if this decides to rebound back up, well, then that could very well bring the market back down. All right. But let's go to this one, right? We have an inverted hammer candle on the chart here, right? And while it's inverted, as a singular signal, that is a bearish candle, right? That's the bear case of this candle. But you may have bulls saying, well, it's still potentially closing higher than yesterday's close. And I can't deny that. You know, you look at the charts like, yeah, I see both. Inverted hammer candle bearish, but it's still closing higher than yesterday's open, or excuse me, yesterday's close. So that's still bullish as well, right? Then you come over here to the VIX, and it's just the opposite. Now you have a hammer candle where, you know, as a singular signal, that's a bullish signal. Despite the color of it, it's a bullish signal. But, right, it's still potentially closing lower than yesterday's candle. So it's like there's too many contradictions in the overall market to say, you know, to have conviction in either direction. So that's your third reason as to why you just want to let the dust settle. Let the dust settle, right? Yeah, just let the dust settle. So really, if you guys, if you have any plays, by all means, throw them out there. But I'm really not, I wouldn't suggest playing anything. I don't mind being that guy. You may have very well showed up today hoping to get some plays, some easy money, but I'm not seeing it. There are no ideal setups going on. You know, it just happens to be that whenever we do these lives now, it's either the plays didn't happen yet or you're too late. A lot of things we find in the lead group, we find on Monday, Tuesday, sometimes later in the week, but usually if we're not in a play on Monday, Tuesday, and the stock already made a move in a direction, it's like, you might be too late. But James wants to check out Sabre. We shall do that for you, brother. Let me check it out. SABR, right? Yeah, it's another one. It's tough because check it out. You might say it's bearish. I don't disagree with the candle. By the way, let me be clear on that. It's a bearish candle. It gapped up. Now it's sold all the way off. But look where it sold down to. Right. Let's just start with price action from the past. Where were areas of support, areas of resistance? It's kind of this zone as well. I'm gonna just say it's a zone. I'm not gonna keep it as such a linear thing. All right. Now let's bring both of these zones over. Say about right there, right? Let's drag it on over. That could be resistance now. That could be support. All right. And what confirms it, last time we got up to these levels was around here. Look how it behaved, right? And then when it got up to this one, which was pretty much the last 2 weeks, look how it behaved. So we're back into this box, all right? There's not much I would feel confident about. Yes, the volume. Oh, let's not even get into volume yet. Let's not get into volume yet. So I'm gonna bring up another chart here. Check it out. I'm not sure how well Sabre follows the market either, but we were talking about a chop box on the SPY, right? That's where we've been pretty much since the middle of November, or maybe the second week of November. Popped up and then it started chopping around, chop, or rock, right? Now this one, all right, we identified a zone, excuse me. I want to just turn this to a line now. Bang, roughly. And bring this one up around there. Look what it's been doing the past 2 weeks. This little chop box around here, right? Bang. So we're really just back into this zone here, to take trades like this, I feel like you have to be very tactical. James, I'm not sure what your intentions are with the trade. Is it longer term, shorter term? Are you looking for a quick swing? If short term, it's tough to say. I'll say that right away. But bearish candle, decreasing volume. So although the day or the candle itself is very bearish, I'm not sure if this is good enough volume to validate how bearish it looks. I'm trying to get a gauge of average volume. It's pretty tough to see, but we were talking about credit spreads maybe, but it's a cheaper stock. It's tough to play. I'm not getting anything from this one. How about that? It's not a setup I like yet. I liked it, let's say yesterday. Yesterday, I think was a good time. If it were a normal day today. All right. So if you would have brought this to, if we had lives on Monday and you would have brought this one up yesterday, right? I'd be more of a fan because yesterday was the first day of the breakout. What am I talking about? What are you talking about, Elliot? You can see this consolidation here, right? And yesterday's candle broke out of that. Volume wasn't the best, but again, with this stock, it seems like anywhere around 5 million volume is pretty good. So it did what it had to do. But I think the reason the majority of stocks went up today is because the good news before the market opened. So you got in where it is now, missed the upswing. So did you get into this last week? Curious. I need some water. I need to drink my gallon. Moderna? Rennie. Don't fall for I almost wrote Rennie. Don't fall for the Moderna. Look, I'll show you something. I'll show you something. One quick tip. One single thing you could do to avoid or know when to avoid plays like Moderna. All right. I'll show you. Okay, I see what you mean, James. So you got in last week during the consolidation, or maybe even back here somewhere. So you missed the upswing. I would say try using price alerts. I'm a big fan of price alerts. I don't know, if you had a price target in mind, if it was a reasonable price. There's so many different factors we could dig into, but that's not usually the conversations we have here. Moderna. So check it out, Rennie. I'm not sure if you look at charts, but this is why you want to look at charts. All right. Yesterday, we closed here. Today, we opened up here and we're up here right now. But check this out. The market day is not even over. Look how much volume we have. That's just those two things alone. Big move and ridiculous volume, right? It's, we say we like to see volume, but too much of anything is bad, all right? What's the saying? Too much of a good thing could be bad. Well, this is a perfect example of it, right? Too much oxygen, you could die. Too much water, you overhydrate. Too much, you need balance. And this is just going berserk. And what this tells me right away is catalyst. Something's going on, something's in the headlines. We actually did come across this in the screener earlier today before this live. And I was like, yeah, something's not right. Come to find out, something with a cancer drug that they have going on. So maybe long term, but again, I don't know everyone's intentions with the market. I usually have those discussions with our members, so I have an idea of how they want to play things. This could be good longer term, but on a swing trade, I don't like getting involved with catalyst type of things. Let's just see, right? Look. Let's kind of use previous price history, right? So we see right there, it kind of has trouble breaking down, right? Then it pops up and then falls down, and then again uses that area as a ceiling. So this level here has some, type of resistance, right? And you might say, well, it got some ways to go. I don't disagree at all. Then it comes down to here and starts using this as a floor before popping up. Let's bring that on over. Boom, that's where we are now, all right? And then we have these areas right here. So we're at an area of resistance. Yes, the volume is insane, but it's not going insane because it's natural, right? Insanity itself really isn't natural. People could debate about that. That's a different conversation. Leave that for a podcast. But yeah, in a nutshell, if you know it had a catalyst and you're not into playing catalyst type moves, you probably just want to stay away from it, really. There's a lot of good stocks that, it's just this environment right now, this week, it's just a volatile one. Oh, I didn't even give the fifth reason. I just thought of it. Every quarter of the year, there's a day called quad witching. And again, if you know your quarters of the year, it's the third month at the end of the quarter. December is the third month of this fourth quarter. And the monthly expiration for this month is the 16th, this Friday. So anyone that knows quad witching is aware of volatility. And volatility works both ways. It doesn't discriminate versus bulls or bears. So with a lot of volatility, if you're looking for short-term trades, it's all about keeping the position sizing small. So be careful. And that's the fifth reason why you may not want to trade this week. All right. So again, you might have came in here for trade ideas, but I'm just giving caution. I'm just giving caution today. Today's caution day, caution week. All right. So yeah, I matter of fact, let's kind of, again, just to assure you, I'm not making this stuff up, Rennie. We're gonna go into mRNA here. You can also go into Yahoo Finance. All right, you can go Finviz, type it in, right, and scroll down. Let's see what was said about this. Look, December 13th, 1:21 p.m., Moderna stock breaks out as cancer vaccine shows promise in Keytruda. I don't know if I said that right, but I gave it a try. So there goes the catalyst. Let's see when, here we go. It was actually an article released at 7 a.m. before the market opened. Cancer vaccine reduces deaths in melanoma patients. So this is all an emotional type of move. And by emotional, I don't mean like pity party type stuff. That's not what I mean. It's just people get excited. They buy into the hype, the news. When we're starting getting, we get a little euphoric, hopium kicks in, and we start making irrational decisions. I hope that vaccine really does work, though. By all means, I hope it does. But you got to try to separate profits from emotion. Don't want to mix those two. All right. Keep this trade like a business, and maybe you can invest long term. I don't know, but I just wouldn't want to trade based off of that alone. And you can go into, again, all these websites I'm using are free. Yahoo Finance, or is it Finance Yahoo? Finance.yahoo. You check it out here as well. Right? You put in mRNA, excuse me. And they'll likely say that, yeah, personalized cancer vaccine results are a home run, says the CEO. Home run. So, and it moved 20% today. Sheesh, that's ridiculous. So yeah, those are all the reasons why you probably just want to stay away in general. Tesla, we got Tesla, yuck. Samantha, I wanted to try your last name as well. I'm going to try it. Please forgive me if I chop it up, Zaralbin? Zaralban? Something like that, right? Welcome, Samantha. But yeah, let's check out Tesla. Yeah, Tesla's nasty. Ridiculous volume, breaking down through support. The thing with Tesla is we're gonna have to go back. We're gonna really have to zoom out because I have no reference points from the past to use to gauge its limits. So let's try 2 years. Give it a shot with 2 years. Not even 2 years isn't enough. Okay, so let's go to my weekly chart here. Weekly, weekly, weekly. Ooh, check it out. Let me remove these. You got it. You got it. It's a raw band. You know, I could read. I could read. Let me remove these Bollinger Bands. All right. Let's just see where we're at overall, you know? And I'm not going to start where we are today. All right. I'm not going to start over here. I'm going to start over here. All right. Identify a point, identify a point, identify a point. Right. A 1, a 2, a 3. And let's just start there. And as you can see, we're potentially at an area of support with the 200 SMA and this natural area from back in 2020. All right. Now let's get some trend lines going. How about that? Podge. Podge. It's a cool name. What does that remind me of? Podge. Oh no, I'm thinking of Posh. Isn't there like Posh Spice? I don't know my Spice Girls, but I feel like one of them was Posh. I don't know. I know your name's not Posh. It just reminded me of that, but welcome, Podge. Don't be upset. You're triggering. I'm off the cuff right now. I want to see shorter term type of trend line. So I could say that. I'm gonna use this low here, that low there, take them together, drag it across, and ta-da, we're potentially at an area of support. So maybe not, this is a weekly chart. You know, Randy, if by Friday, you know, the end of Friday, we're looking somewhere to be closing below here, right? You might consider some credit spreads, you know, might be good for some credit spreads, but want to be careful overall. Again, would I trade anything this week? Probably not. I'm not joking. I'm not feeling confident about anything I'm reading right now. There's nothing wrong with that, in my opinion. Right? Last 2 weeks, actually, the last 3 months, patience has been paying off. So that's Tesla. You guys got anything? Pod, you have a stock for us? Samantha, what we got? What you got? Tone, you still in here? What you got? If not, let me see. If not, I have to call it an early. I got it. Okay, I'm reading an old message. Excuse me. If not, we can wrap this Amazon. All right. You snuck one in there. But yeah, if nobody has stocks to look at, I think it's an easy day to just say, no, no, no. They try to make me go to Amazon, huh? You know, believe it or not, you may not believe it, but I couldn't download one of my videos before because I sang so well. They said I had some copyright infringement stuff going on. How about that? Just watching UAL, looking to close out. Yes, sir. That's when we talked about last Thursday. See, in the elite group, we like to try to find things before people start talking about them. Because once people start talking about them, it's unpredictable. All right. You want to find them before people get there, right? You want to get there before the punch bowl's full of backwash. So Amazon, let's talk about it. Let's talk about Amazon. I want to kind of approach this a couple different ways. All right. So we have a zone here where it got up right? 1, 2, and fell off. Ford, let's check out Ford as well. Maybe next week, fair. And get up to here as well, right? You got this area where it came down to. So let's just throw lines on there. Just keep it very simple, very simple. So that is resistance to the upside. All right. Let's draw a little trend line like that as well. I mean, this is a longer term trend line. Let's go through here. Bang, bang, right? See where we are. I know there's a lot of lines, but you gotta deal with it right now. All right. You gotta deal with it. I like to see the context of the situation. So we're near and it tested that $90 support today, trying to close back above those shorter term averages. So on the bull side of things, closing above 97.5 could potentially revisit this previous high here. But to make a strong bearish case, maybe knock out that low, right? Because remember, if you don't know, I want you to forever remember this. And if you forget, shit, no, I'm kidding. Bull trends, right? We spoke about this. They make higher highs, higher lows. All right. That's how you get a trend that does that. All right. Bear trends, they do lower highs and lower lows. And naturally, that's how you get this. All right. Why am I talking about that? Well, when I look here, I see a high, I see a low, I see a lower high, I see a lower low. And then I see potentially a lower high here. So, are we doing something like this? Is this where we are now? Let me remove some of these. Are we coming back down to here or lower? It depends if we knock out the previous low. If we knock out 87.5, we go lower. All right. If we knock out 97.5, we go higher. All right. But until then, it's anyone's game. I'll bring up Amazon over here as well. AMZN. AMZN. On a weekly though. Excuse me. Yeah, consolidating. Not giving much. So nothing on nothing on Amazon. I got you said Qs. Pretty much the way I'm feeling about the SPY is how I feel about the Qs. Yes, it's a bearish candle. Yes, it's increased volume. Everything is likely going to have increased volume today because there's so much hype going on in the market. But just like the SPY, let's compare the two. I would say this in the future for anyone watching these every week. If you're a fan of QQQ, and we mostly talk about the SPY, but if you're a fan of QQQ, whatever said about the SPY, it's kind of the same thing for the Qs, right? They look pretty much identical. Can we agree? Pretty much identical. All right. So earlier we said SPY is back in this chop box. Back in that chop box. Trying to stay out of it. You see it trying to fight back out. Chop box. Well, guess what? Qs. Same thing. Chop box. When we close above 295, I think we could go higher. When we close below 280, I think we could go lower. Right now, to try to play within that chop box is dangerous. If you're open to taking risks, by all means, do what you do. But if you want to be consistent longer term, try to build the habits now and just wait for an ideal setup. I don't think this is it yet. So I wouldn't play, but 295 to the upside, 280 to the downside, and maybe we'll have something then. Forward. Oh, I put FF. Waiting to see if Dell will gain more volume and push past 200 MA to make a push. So, what is that one? Oh, duh. Dell. Got it. Ooh. Hmm. That's fun too. Can I annotate what's going on? So you could bring it back from here, or you could just say, this is the current trend we're in. Either one. You can say that is as well, right? Identify some past areas. Jose Perez, what's going on, man? You can see around here, act as support, resistance. So I'm going to throw a line there. I don't know if it applies to where we are now, but we're going to find out. And it kind of does, all right? So maybe losing that area of support. This might, VFC, I got you. So Felix, this isn't the ideal setup. Let me rephrase that. I say it's not the ideal setup because of the current market environment, but I could see why someone tries to take this, play it to the downside. Right? If we say risk versus reward, you know, I'd manage my risk back up to maybe here. If it closes higher than that, I get out. But we might be able to play it down to 13, right? And when I just put these two geometrical figures next to each other, we're looking at greater reward than risk if we play it to the downside, right? Do I think it's going to? Got a decently bearish candle. I would like if it closed lower than the open or lower than the close of the previous day, because right now that's still acting as support right there. So, but volume is going to be increased by the end of the day as well. So I'd be willing to play a quick swing if it were to close lower than yesterday's close. But for a bigger move, when it closes below 13, or if it closes above, for starters, when it closes below 13, we may see lower. When it closes above 14 or 1450, we can very well see higher. All right. Need to see what it does this week for a play to the downside. Just keeping an eye on it for now. Fair enough. Ooh, that was a good back crack. Need that. I need that. I need that. VFC. What we got here? Microsoft. What's up, Craig? I'm not gonna lie, Craig. Your last name, it triggers songs. Not only that, your first name is one syllable as well, so it fits right into it. You probably heard it already before. I'm sure you heard the song, but I mean, I'm sure I wouldn't be the only one that ended up singing it. VFC, consumer discretionary clothing and accessories. What do we like about this? Not much right now. I like the volume. It has, has pretty good volume overall. Check it out. So I'm just going to draw what I'm a hone in here. I'm a hone in. So we had this old trend like this, right? And then it broke down here, right? Ended up going lower, popped up, and then created support there. And look what happened when it broke even lower, right? When we knock out a previous low, we go lower. We knock out a previous high, we go higher. So we knocked out a previous low, went all the way down, down. So now things are starting to change. It consolidated, broke out. Oh, I love those. Those are my favorite plays. So whenever I don't see consolidation, I'm a little skeptical. I don't like it. Not that I don't like it, but I get pickier about playing it because it's not so much a breakout strategy. Now we're playing bounce. So then it broke out. Look, when you wait patiently, right? You wait patiently and you get the signal you're looking for, you get results, right? So it ran up, then it started consolidating here. And look, when it broke down, it went down. So right now, it's not really doing enough to say whether it's going to go up or down. It might just be, it made its move down. So we might see some more consolidation, right? I would like to see consolidation around here and then a clean breakout back above, maybe. Really? You would want to get at least above back there, above 34. Back above 34. Um, if we close below 27, we may see lower, but this one's in a real not so pretty place, right? I wouldn't get involved with this one in either direction yet. Not yet. Oops, excuse me. Hey, where'd my comments go? All right, there we go. Hopefully that helps, Jose, but really, maybe, I don't know, maybe you heard something. I don't really follow news with this stuff. I make sure there aren't any. Like if I see something alarming, like we did on Moderna, then I'll go see if there's news. But MSFT. Mm, tough, tough. So what do we got here? Reference points, drag it on through. Right? Bang, bang. This is the trend as well. It's kind of like, yeah. All right. So let's mark out some areas. So I see resistance in this area. See some support resistance in this area, right? And then we have previous area of resistance right here. So we hit the 200. Oops. It started selling off a little, but now it's like really between here and this old area. So volume is going to be increased, just in a weird area, I don't want to play to the upside because we already missed the bounce. I don't really want to say, hey, we're going to go lower because this lower wick is already showing us buyers stepped in after the gap fill. So it's not it. It's not it. It is not it. What would make it though, right? What would make it? If the SPY closed below 400, that could make it. But if not, we just remain patient. Don't force the issue today. I think tomorrow will give some more clarity of which way the market wants to go. But if you're playing something, so tomorrow that news comes out at 2 p.m. Eastern. But I think what's really going to affect is when every time Jerome Powell opens his mouth, things happen, right? For better or worse. But depending how you play the market, it can always be for better. So let's just wait till 2:30. More so like 3 o'clock tomorrow. See what happens. All right. But in the meantime, seriously, I gave 5 reasons as to why you probably want to not play. Stay out the market this week, at least today and tomorrow. And let's see what happens. Let the dust settle. You got in on Friday to the upside or downside? I'm curious. Because when I look at Friday, I see nothing yet. I probably would have just waited. because we have an area of support here and we had resistance around here. So, and it was a little baby candle, good volume, decent volume, but I would have waited. Bull put, nice. Okay, okay. So you did a bull put. See, that's different. That's different. You already know that's different. You already know that's different, but good stuff. All right. Bull credit spreads, that's a different ball game. So good stuff. Fair enough. Fair enough. Fair enough. So yeah, I'll leave it on that. For those of you that joined, appreciate you showing up, hearing another perspective. You know, hopefully it helps. And I will see you all next Tuesday. All right. Take care, y'all.